Here we have the current stock market update for SoundHound AI Incorporated, stock ticker SOUN. Before we begin with today's chart analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So as we can see here, share prices have actually started to obey this prior trend line that we've been watching quite closely. This is an interesting development here because there was a huge amount of downside selling pressure that was being centered on this stock. So it is interesting here that we're starting to see this trend line actually hold up. This is the 1 hour price chart that we're watching. So each candle here represents a 1 hour trading period. And, for the most part, I don't really like to focus on a trend line alone as enough of a reason to base a trade. I do like to see, generally, I'm trying to look for 3 different signals that are sort of converging in the same area. And, a trend line's fine, but, and I don't think that it's just drawing a line on a chart or anything like that. I think it's a representation of market behavior and, whether or not share prices are finding higher lows and things like that. I mean, I do think that those are significant events. And it's not simply a line on a chart, but I do try to look for more than just a trend line whenever basing a trade here. So it is interesting that we did actually fall below this 200-hour exponential moving average, but yet somehow we're still not really losing this trend line just yet. So it's possible that will still happen, but it is interesting to me because there was so much negative momentum here. Downside momentum. It's just interesting to me that this trend line managed to catch that area. I mean, we are looking at a couple of different technical signals that are sort of overlapping right around this area. You can say here that there is a 61.8% Fibonacci retracement zone. So right there, and then in addition to that, you also have this blue line here, which is the 200-hour exponential moving average. So, there are a couple of things here that are sort of aligning right in the same area. Yeah, you do have to give some leeway with these things. I mean, you can't really expect a chart analysis signal to catch share prices to the penny and things like that. So you can see some slippage and things. It's possible that we see a bounce here, and then if that does happen, if we do see a bounce here to the top side, then I think it would be fair to say that all of these support zones really did manage to contain share prices, even though there is a bit of a price movement below here, below the 618, below the 200-hour EMA, and then even below the trend line itself. I mean, you can see here that we do have a spike low below this area as well. So, this will be critical to see where the daily close is here because. If we do see a daily close perhaps below the trend line, then it does look like it's starting to break down a bit more. And then that means that a bounce from here would be less likely. To the downside, I mean, if we do still continue to expect share prices to continue moving lower, this next level that I would be watching to the downside comes in at $4.86. That would be this price low from the 23rd of October 23. So, we are starting to get into some fairly critical support zones at that point, because if you do lose that area as well, you're also looking at a retest of the 78.6% Fibonacci retracement zone, which comes in right around $4.80. That's also a bit of a prior price high from back here, which would be expected to work as a support zone. So if that does collapse and that does break, that would be a negative signal. Quickly before I end the video here, we will just take a look at the indicator readings. The majority of the momentum here is bearish, but there is a little bit of bullish momentum that is starting to develop. So, on balance, I would call this a negative reading. The majority of the momentum here is focused on the downside direction. And it would take quite a bit of upside price movement here to invalidate that trend line here, as we can see here. So we're just sort of now bouncing out of oversold territory, and there's a lot of ground here that would need to be covered in order for the relative strength index to move high enough to break above this declining trend line here. You really would need to move from oversold territory to overbought territory, and that is kind of a lot to ask. So it's not exactly expected to happen here near term necessarily, but it is a good sign to see that positive momentum is starting to develop here. And we will need to see how things start to unfold from there. So, as it currently stands, there's a long way to go here before moving back into the 625 area. But if we do sort of take a broader look here, just take a bit more of a long-term view, there were several areas of resistance that did break in the process as share prices were sort of moving into this price movement here. Let's make that an arrow instead. So, there was a lot of resistance that was broken during this price move. I mean, we did see a lot of upside price movement here. We broke through this 550 level, which was an important double top resistance zone. It's also a 61.8% retracement of this declining move here. So, all of that was broken in this process. So I do think that, on balance, I actually do think that this is still a bullish outlook, but it's been a bit messy and it has been difficult here with this most recent price movement lower. This is a lot of downside price movement in a very short period of time. And it follows, a very big rally here previously. So I personally really don't like to see this type of two-way price action like this. And it really does show that share prices need to find some sort of support here relatively soon. Because if that does not occur, then you have to start to wonder, why all of this price movement happened in the first place, if all we were going to do was sort of decline here and start to move lower. So, on balance, I would still consider this to be a bullish outlook. But I do think that, this decline can't really extend much further and still maintain that viewpoint. So if we lose $4.86, you're really starting to look at, then 445, and then we're back into this lower region here. And, if all of those areas do start to break, you also have to start to look at, this trend movement here, because we didn't exactly retest those prior highs. That would sort of be this trend movement at this point here. So 645 to 625, if we have reason to believe that 625 is really this near-term top and it's starting to develop here in that direction, that would then tell us that there's a series of lower highs here, and then that would be its own bearish signal. So that would be a concerning point here. We're not exactly there yet. We do need to sort of look at what happens here, sort of near term. Because an upside price movement here can, sort of maintain this trend line, maintain the 61.8% retracement zone, possibly even sort of maintain that 200 period exponential moving average. So, it's not quite the game is not quite over yet, but it's definitely showing some vulnerability at the moment. So here's the current market update for SoundHound, stock ticker SOUN. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.